Hey guys, welcome back to the channel. I hope everyone is doing well. So today I'm kind of scraping the bottom of the barrel here, but I don't want to be too harsh on this new ETF from a old fart company. I think it's in general it's good to have more competition, especially with the cash secured put space, because most of it seems to be concentrated in the covered call space. So in a way, it is good to see a like a new cash secured put, and this is actually a typo. Sorry about that. Let me just fix this real quick for you guys. Cash secured put ETF. And are they late to the party? In my opinion, no. But keep in mind again, this is not approved. Let's see. So this thing is called the Newberger Berman Option Strategy ETF. So this was filed on January 12th with the SEC. So keep in mind, none of this is approved. But they do have their expense ratio, so it's 56 basis points. So it's not too bad. And this is where it gets a little bit hairy. It's kind of open ended, and there's a potential for a liquid crap to be in this fund. So the writing collateralized put options on U.S. indices, including the S&P 500 index and other indices in the S&P 500. And this could include exchange traded funds, which I think would probably be the SPY, but it could be other stuff too. This is a little undefined. And this time, instead of using like treasuries as the base, they're using fixed income instruments, but it could be of any duration, may include variable and floating rate instruments, and may include U.S. treasuries. So this one, I'm kind of a little leery about, and then also debt securities issued by corporations. So this could, and it also includes structured notes, mortgage-backed securities, and asset-backed securities. And that's where I'm like a little, I'm a little iffy on this. And then they also say the notional basis. So basically like the base of the treasury funds. So like if they're selling like cash secured puts, this could potentially go over like 100% of the fund's total assets. But at least they'll put a cap on it where it won't exceed 125% of total assets. So there's a kind of a potential for over leveraging here, which I don't like. And then also, I guess like a minor thing, the portfolio managers generally prefer European style options. I think for most people, like most people won't care, but this basically means like you can't exercise until like at the end of the expiration cycle. So it's just like a minor tidbit, but I'm not like too thrilled so far. And the other thing is this is kind of like ETF recycling. So this is like an old fund. So there used to be something called Newberger Berman U.S. Equity Index Put Right Strategy Fund. So I'm not sure why they're repackaging this. I'm guessing the maybe the fund had like some poor performance and they're trying to maybe like if they put a new coat of paint on it, like that it'll sell better, I guess. And I'm also sorry about this. I created like an extra slide by accident, I guess. So, but at least like the performance like of the old fund, at least they're sharing it this with us. So like, the best quarter they did over 12, almost close to 13%, and then the worst quarter was almost 15%. So I like the fact that they're able to kind of like show us like potentially what this fund could do. And the return before taxes at 7.22% isn't that exciting, I guess. And it's also good that they put in like instead of doing like this put cash secured put strategy, they also put like the S&P 500 index. And for like since like their inception, they're doing a comparison. So I think it's good that they're at least upfront about it. Like, well, this fund could potentially underperform by like almost 50%. So at least they're upfront about it. So for me, I'm gonna stay away. But this might be good for I guess maybe you're a collector of ETFs and you want some diversification from I guess like ETF issuers. I guess this might be for you. But for me myself personally, I'm gonna stay away. Well, I guess in general, it's always good to have like a diversification of your income-based investments, especially when you're heading into retirement or you just want to like live off the dividends. So it's always good to have like a mix of treasuries, dividend aristocrats, etc. And of course, like the risks are like there's definitely no control over the option strike selection. And with this fund, like they seem kind of vague. They didn't list out like any potential strategy. And of course, like implied volatility collapse is going to affect all option-based funds, especially if you're selling them. So this can definitely get cheaper, and the yields won't be consistent month to month. And this particular fund had so many weird stuff in it that, or potentially could have some weird stuff in it that I'm not, I'm a little too leery about this. And I guess like you don't even need to borrow against it because like you mentioned that it could potentially go up to 125% of total net assets in terms of selling cash secured puts. So, you know, I guess it might be for some risk seeking people. So if you like this type of content, please consider giving this a like. Even though like this particular ETF going through the SEC dumpster was a little boring this time, but sometimes you find good stuff. So please consider giving this a like. And I welcome all subscribers. Thank you very much for helping grow the channel. Thank you. I hope you guys make some good money in 2024, and I see you in the next video. Bye now.